A lot of new traders tend to overcomplicate their trading by having 90 different studies for technical analysis and having so many patterns on their chart to where it looks like their mom's spaghetti. But I like to keep things simple. As somebody who's been trading options for 3 years now with around an 80% win rate, I know what works for me. So in today's video, I'm going to be showing you how I do technical analysis, and we're going to start off with the basics like support and resistance levels. And towards the end of the video, we're going to work our way up to more advanced studies like IV percentile. And this tool has been extremely helpful for me around earnings reports, so hopefully you stick around for that. Now, I want to start this video off by saying that technical analysis should not be the sole basis of your trading, because this is a lot like astrology, but for entrepreneurs. This isn't to say that technical analysis is completely useless, because in the end, stocks are traded by humans, and humans like to stick with patterns. But patterns can go straight out the window if you have different geopolitical issues like we're experiencing right now, or if there's an event such as an earnings report. If a company posts a really good earnings report, you might as well just delete all the patterns you just drew on your chart. Technical analysis should only be one piece of the entire equation for your trading. And the first thing I want to cover for technical analysis is the time frames that I use. The first one that I like to use is the 1 year 1 day chart, which is the one that I'm on right now for SPY. And I typically use the 1 year 1 day chart to draw up support and resistance levels, because this is by far the most common chart amongst traders. So this is really important in determining different price levels where a stock could pivot at. And the next time frame that I use is the 2 day 5 minute chart, which is my shortest time interval. And the reason why I use this instead of a 1 day 1 minute chart is because I like to look at the previous trading day and compare it to today to see if the stock market has changed sentiment. And the next time interval that I like to use is the 20-day 1 hour chart. So this is the last 20 trading days, so typically around a month. And I typically use this for an earnings report to see if a stock has been trading bullish or bearish going into the earnings report, and use this to determine if the stock could change from bullish to bearish. And the last two charts that I use is the 3 year 1 week chart and the max by monthly chart. Typically, whenever I'm looking at the max by monthly chart, I'm making comparisons to the 2008 financial crisis. And whenever I'm using the 3 year 1 week chart, I'm using this to compare past earnings reports over the last couple of years. So I take the average of the earnings per shares over the last 2 years or so, and I use this to estimate how the earnings report for the next quarter might go. So these are the time frames that I use and why I use them specifically. And the next basic thing that you need for technical analysis is going to be support and resistance levels. And you'll see that I have a few drawn up already, one at 409.30 for resistance level since it's above the current stock price, and then one at 392.25. But neither of these are very close to the stock trading at 397.78. And the way that I'm going to come up with my next resistance level is by looking at the charts and seeing this low was pretty significant compared to the close of the candle. And there's a couple of opens right here with these red candles, so this is a pretty solid support to go by. So we're going to draw it up at 405, which is roughly the low of the candle. And now we have our new resistance. So whenever SPY comes to around 405, there's a decent chance that it might get rejected. That's not to say that it can't blow past it, because if there's enough volume heading into it, then it can definitely go past that and up to my next resistance levels. But this is the next level to look out for on the upside for me. So that's support and resistance levels, and the next thing you're going to notice on my screen is going to be these purple and yellow lines. And you're probably thinking, what the hell are these? And the reason why I added them to my charts is because I noticed that during weeks 3 and 4, every single month, SPY would make a move in a really big way. So I use these trend lines to find the average of the last 7 months between weeks 3 and 4, and the average move was 7.5%. And I was able to determine how far SPY might fall in August. Since it topped at 431.50, I figured this would probably be the pivot point. So I drew the trend line all the way till the 4th week right here, and I estimated that SPY could fall down to around $398.50. Now it ended up completely missing this with SPY closing at 405, but that's why I had these yellow dotted lines drew up, which was 1 standard deviation away from the golden line that I had. VIX was trading around 24 at the time, so I figured that I would give myself 1.5% of leeway, and SPY just about closed immediately at this top yellow dotted trend line. I was able to make 150% returns by buying a put debit spread and using this yellow dotted trend line. So that's the basics for you. You have support, resistance lines, you have trend lines. You can also add patterns to your charts like head and shoulders or reversed head and shoulders. But I don't like to overcomplicate my trading by adding a ton of different lines on my charts to where it looks like spaghetti. Instead, I like to use studies. So I have RSI, which is Relative Strength Index, and this will tell you if a stock is trading bullish or bearish. Right now, SPY is trading at 42.7 RSI, so since it's below 50, that signals that SPY is trading bearish right now since it's weaker than usual, which would be the 50 RSI. Now, RSI will also tell you if a stock is overbought or oversold, such as it was back in August when it hit as high as 73 RSI, and then it ended up selling off for the next few weeks. But just because a stock is overbought or oversold doesn't mean that it's going to immediately turn around. Like we saw back here during November, SPY went into overbought territory, but it ended up making an even higher high at 480 versus the high back here at $470. So if you sold out because SPY was overbought, you would have lost out on another $10 of gains. And the same thing goes for a stock being oversold. Just because SPY was oversold back in January didn't mean that it would just reverse back up. It went to $421 at the very bottom during the oversell off, but now it's trading at $397. So if you bought SPY thinking that it would bounce because it was oversold, right now you'd be down a lot of money. So this is why I like to use RSI to determine if a stock is trading bullish or bearish, rather than saying that it's overbought or oversold. And again, right now SPY is trading at 42 RSI, so technically it's bearish. And another way you can determine if a stock is trading bullish or bearish is by using the MACD indicator. Now, the MACD indicator is a momentum indicator, so it's probably the best tool to use to determine if a stock is bullish or bearish. And right now, SPY is going bearish since these two lines are headed below this zero purple line right here. Whenever the stock is below the purple line, this means that the stock is bearish. So if you shorted SPY whenever it went bearish on the MACD, you would have been able to make gains from $440 all the way down to $397 right now. And then if you bought SPY whenever MACD went bullish, when both lines went above zero, you would have bought it around $390 or $410. And if you sold it at the top, you would have been able to make a decent amount of profit. But this is only going to tell you when a stock is bullish or bearish, and it's not going to tell you when to exit the trade. A good way to exit a trade based on the MACD indicator is whenever there is a sell indicator where the blue line goes below the yellow line, like we saw right here on August 18th, or a good buy indicator would have been when the blue line went above the yellow line and trended up into bullish territory for the next couple of months. But since SPY is currently trading in bearish MACD territory, again, below this zero purple line right here, I'd probably take the shorts and go along with the bears instead of being bullish on SPY, at least for right now. So MACD and RSI are really good tools for determining if a stock is trading bullish or bearish. Right now, both of these indicators are saying that SPY is bearish since it's below 50 RSI and the MACD just went negative. So again, I'd probably be going against the market rather than buying in right now. And the last study that I like to use is Implied Volatility, IV Rank, and IV Percentile. This is a study that I added over the last couple weeks to improve my trading around earnings reports, and it's been extremely useful. And the way that I use IV Rank, and IV Percentile is by going to an individual stock right ahead of an earnings report like Docu this week. And right now the IV is 106, which is extremely high. If you look at the last 252 trading days, according to the IV Percentile, 86 or 217 days out of those 250 days were below the current IV level. Now, I'm assuming that Docu won't move as much as the markets are expecting, because if we look at the trade tab, the expected move for this week is $9.74. And this is only a $55 stock. So this means that the markets are expecting Docu to move by about 15%, which I think is completely insane. So I use this in combination with IV Rank, and IV Percentile at 86% to say that IV is really high right now and I don't expect the stock to move a ton, and I opened an iron condor. and I'm assuming that Docu won't move up or down more than 12%, whereas the market's expected to move more than 15%. So if I'm right on this trade, I'll beat the market by taking advantage of Ivy Crush. And these are all the different studies that I like to use, but again, I don't solely rely on technical analysis for my trading. I like to look at past earnings reports, I like to look at analyst expectations, I like to follow macro news, and other things that are going to move the markets, because it's not all about the charts. Well, hopefully you found this video useful. Thanks for making it all the way to the end, and thank you to all my patrons for the support. And as always, remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.